Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with a fan favorite, Mr. Dan Bird, where we talk about last week, this week, stock market, talk about where we're going, talk about all the important economic reports. Really, for next week, it's going to be a wild week. Mr. Bird, how you doing?
I'm doing very well. How about you?
Awesome. I'm doing great. I look forward to next week, right? We got CPI on Tuesday, we got the Fed decision on Wednesday, and not to be outdone, we got retail sales on Thursday. I think those three reports are going to tell us if Santa Claus brings us some joy or lumps of coal. So curious what your thoughts are.
Let me share my screen since you decided to start there.
There you go.
Here's last week and next week.
I love the fact that you put this out there. This is something I've been tracking for years, but now that you summarize it, it's a very good visual.
Yeah, there's a lot of other things. These are I just do the ones that are 3-star of importance. So these, according to the site that I get this from, they deem the ones with 3 stars as the most important.
Yeah. Okay.
There are others, but I don't want to clutter it up too much. So
I think you've done the right thing. These are what I look at as well. I mean, one thing that I'll be looking at probably for the next 6 months is on Thursday, the weekly initial jobless claims. I think for the Fed to show that they are quote unquote winning, which means unfortunately job losses, that's got to get a lot closer to 300,000 weekly than the low 200s. But yeah, there's a lot in this, and then we got the big reports next week. So not sure what you want to talk about last week first. Kind of look at that, and then we'll talk about the setup for next week.
Yeah, well, last week PPI was the most important one, I guess. It came in a little hotter than expected, although it was the same as the previous month.
Yep,
roughly.
Yeah,
it came in a little hotter.
Yeah, the headline number was down, so the trajectory is still good, but the month on month was a point higher. Expectations were 0.2. It came in at 0.3, which matched last month. Really, for me, it was really interesting to see that energy was down 3.3%, but food was up 3.3%. And the other one that, again, I keep pointing at is services. The services component was up 0.4, where goods or stuff was only up 0.1. So, again, I don't think
services actually was probably the hottest item in there.
It was. And again, what have I been talking about for 6 months? Services, wage inflation.
Right.
It's baked into services. So really pointing at what we've been talking about on the channel is really happening. So interesting.
Yeah, and if you've been out to dinner lately, to a restaurant, you can definitely see that both food and services are kind of encapsulated in restaurants.
Totally agree. Yep.
So yeah, so next week is the big one. Next week is going to determine what happens for the rest of the year.
Yes, absolutely.
Which I kind of touched on in my newsletter this week. Let me actually show my newsletter.
Yep, you certainly did. I actually read it cover to cover, so this was an important week.
So if anyone's interested, there's no cost to this. Send me an email at breakpointtrading@gmail.com, and I'll add you to the list. I like putting some cartoons in there. I love this one in the upper left.
Yeah, I don't have enough coal. Yeah.
Yeah, for SBF.
Yeah. Oh well.
And then sometimes I put what my opinion is based on all the data that I'm sharing. So my opinion was everything is dependent on the CPI number on Tuesday morning. That's going to determine what happens for the rest of the year.
Yeah, and 7.3 is the headline number, not core. It's the headline number. Yeah.
Yeah, headline, right. That's the forecasted number. It was 7.7 last month.
It was. Yep.
So that's, if it continues with that trajectory, it's a significant decline.
And again, I mean, we look at energy. Energy's down. A lot of commodities are down. A lot of stuff is down. Used cars are down. I mean, there's a lot of shipping is down. There's a lot of stuff, but unfortunately, for me, it's not about headline. It's about core, which I've been talking about for 4 or 5 months now, because that's where services and owner's equivalent rent and all of that, and the housing component. So I am not really concerned about headline. I'm concerned about core surprising to the upside. So headline could come in low, but headline might surprise to the up. Or I'm sorry, headline may come in light. Core may surprise to the upside is my going concern into Tuesday.
Right. We'll talk about energy in the second session. I want to kind of discuss the coming recession.
Yep. I like it.
Well, there's some things about energy that I'm a little concerned with.
Okay. I look
Pretty
forward
interesting.
teasing
This
episode 2. I like it.
this chart right here is from Stock Traders Almanac,
Mhm.
and they go back 70 years and just look at history. What has history done since 1950?
Mhm.
And this is the history of the three indexes. Now the Nasdaq didn't start till 71, so naturally that can't go back to 1950. But you'll notice that these are trading days. So this one here is based on the election, the midterm election.
Okay.
So they looked at historically after midterm elections, regardless of which party gets power.
Mhm.
There's been 18 of them, and 18 out of 18, 12 months later, the market's been higher. 18 of 18.
Okay.
And you can see where we are right now.
Mhm.
We're right about here.
Okay.
Here's December 21st. That's where the Santa Claus rally typically starts.
Right.
The
It usually
week
starts
before.
the week of Christmas. Yep.
Yeah, the week of Christmas, it'll start. And then you can see here, historically, it just continues higher.
Yeah, it starts the week of Christmas, but typically runs 2 weeks into January. Yep.
Yeah, it usually goes till January 18th.
Okay.
So almost 3 weeks into January.
Okay.
A lot of that is because of mutual funds rebalancing.
Mhm. Yep. 401ks kicking in again. Yep.
401ks, yeah, all that stuff. They start adding because they have to have positions. They typically don't short.
Right.
So they need to have long positions. And they usually do their buying at the end of December into January.
Mhm.
They usually do their tax loss selling right about now.
Yeah.
And you can see that little dip. So we're right here. We're going into next week, which is a really critical week. Actually, this right here highlights it pretty well.
Yep.
So here's where we are. This will be Monday, the eighth trading day. It's
8th
actually
trading day, right?
It's actually the 11th
12th.
or 12th, sorry, but it's the eighth trading day.
Right.
And then 12/13, the Tuesday is the CPI report, Tuesday morning.
Yeah. So I shared what I was thinking about CPI. What were your thoughts? I don't know that I asked. Do you think it comes in at expectations or lower?
Yes, I do.
All right. Do you have the same concern that I do about core, or are you just focused on headline?
I'm focused on headline because that's what
Okay.
the press will be focused on and
Fair
traders will
enough.
be focused on.
All right.
I think core might come in a little bit higher, but I think everybody understands why
Okay.
that happens. So headline is the one that's going to move the market, not core. I think core is important,
Mhm.
but I think headline is the one that'll move the market.
Yeah. So any what do you think the odds are from 0 to 100? We see a 6, like 6.9, 6.8. Any, or do you think that's too much?
I think that's stretching it.
Okay. I'm just curious.
I think we could see 7.1 or 7.2.
Okay.
But I mean, to go from 7.7 to under 7,
yeah, in a single
in
month,
1 month,
that's a lot.
And I'll show you something in a minute that will back that up. Now, the next one we will definitely see 6.
Oh, okay.
And I'll show you why in a second. The Fed rate hike is on the 14th, likely 50 basis points.
I mean, yeah, it's what, 99% 50?
Yeah, it's pretty baked in.
Yeah, I agree.
And then options expiration is on Friday. So very busy week next week.
Let's not forget retail sales. I think retail sales is going to be important on Thursday, right? I think expectations are like negative 0.2. So a negative month heading into, the holidays. That's interesting.
Yeah, I'm not sure we're going to get a negative though. Retail sales is on Thursday.
Yeah.
At 8:30, minus 0.2.
Yeah.
I think it's going to surprise to the upside.
Yeah, again, if it does, it's all this good news is bad news, right? If it surprises the upside, the Fed's got more work to do. If it's negative, oh, the Fed's winning.
Yeah, but interestingly, a lot of that good news is bad news is already priced in.
Sure. Yep.
Everyone pretty much knows what the Fed's going to do now.
Yeah.
And when I get to my charts, I'll show you some of that.
All right.
I think that's priced in. So good news, maybe not right away, but pretty soon. Good news is actually going to be good news.
Okay. Yeah, and again, I think next week it's all about the Fed's news conference. I think 50 is going to be a yawn.
It's really all about this CPI.
Okay. All right.
Everything next week until the rest of the year hinges on Tuesday morning.
Okay. All right.
If we come in hotter than 7.3, then we're probably going down.
Yeah.
If we come in better, 7.3 or better, then I think Santa will show up and we're going to head higher, at least into January.
Yeah. For me, it's going to be the dot plot, which will come out Wednesday afternoon, right? How high, how fast, recession, no recession, unemployment, because the Fed's going to start to have to tell people we're going to accept 1 million more unemployed. And I think that comes out on Wednesday.
We'll see. So here's this again from Stock Traders Almanac. This is 22 years. Or no, I'm sorry. This is 75 years. From 1946.
Okay.
So the orange one is us. They haven't plotted it beyond the last week of November.
Okay.
So we're actually up here now. And we're right here where this big drop happens. So the market dropped last week. This trough right in here is next week.
Got it. Okay.
So that's why I say if we get a good CPI number, we're going to take off.
Tuesday. Yep.
Tuesday is it. That's the big day. So let's take a look at a few things here. So end of last week was not really that great.
No.
Friday, the last hour on Friday. This is an hourly chart.
Oh, I didn't notice that. Okay.
Yeah, look at this very last one. The last hour on Friday. Big
people
drop.
going flat. I want out of the market.
People going flat. Yeah. And Monday, you probably see the same thing. Monday is probably going to be a very slow day in the market.
Yeah, slow trading.
Nobody's going to want to take any positions ahead of the CPI number. So here's the last Fed hike. You see what happened. And then the jobs exceeded expectations right there. And then this is the last jobs number last week.
Yeah, we're sitting right on the 200-day number.
We are sitting, this is an hourly chart, don't forget.
Oh, it's hourly. Okay.
So that's a 200 hour.
Oh, hour. Okay. Well, What is that? Yeah. Okay. Got it.
It's about 50 days. I think it's 21 days. We'll look at a regular chart. But the thing I want to point out, a couple of things I want to point out on this. Number one is this big gap right down here. So there's an open gap between 3,800 and 3,860.
Okay.
Gaps often get filled. Not always, but they often get filled.
Okay.
So if we get a bad number, we're definitely going down and filling this gap. The VIX right here was hanging out at 20, just below 20.
Yeah.
Started to tick back up again.
Yeah. Last time we spoke, it was 19 last week.
Yeah. So these pink lines are 20 and 30.
Oh, okay.
All right. So it's starting to tick back up. And the 10-year Treasury has been hanging out right at that support line. Very important support line.
Okay.
Right around 350.
Yeah, 3.5. Yeah.
And I said last week, when it hit right here, last week it was right in here. I said it's hitting that support line, hit it 1, 2, 3 times. I said it wouldn't surprise me that it starts back up again. Because that's often what happens when anything hits support.
Okay.
It bounces and starts back up, which means the market will come back down. So again, everything will hinge on Tuesday.
5:30 in the morning Pacific. Yep.
Here's that VIX chart. So this one's pretty interesting as well. You see the put call ratio bouncing up and down.
Yeah, look at that.
A lot of traders are trying to buy puts, expecting the market to fall, but the market doesn't fall. So they're buying and then they're selling puts. They're buying and selling. But the thing that I noticed on this is I marked these back here where the gray here is the actual number for the VIX. The red is a 5-day moving average and the green is a 21-day moving average. So I mark where the VIX goes above the 5 right here, and then confirmed when the red one, the 5, goes above the 21. You see that right in there?
I do.
So you see that's when the market started falling. They kind of both happened at the same time over here. That was the top. Right here, where they both happened, they were a little bit more delayed this time.
Okay.
But that kind of marked the top there. And the market sold off. And then you see this channel line ever since the beginning of the year. The market's been bouncing between this channel line. So it hit the bottom right here, back at the low, and then it went back up and just recently hit it again. And the first one of these red arrows just happened.
Oh, yeah, look at that.
On Friday. So in order for the second one to happen, the 5-day needs to get above the 21-day. That means the market has to go down and the VIX will go up. Okay. Again, dependent on Tuesday.
Makes sense.
Depends on what happens on Tuesday. Everything right now is dependent on Tuesday.
Yeah.
And then there's the 10-year Treasury again. It's a longer view of it. And you can see the support line that's been hanging out. Hit the top of it there and then came down, hit it right here, and it's hanging out right around 350.
Yep.
And is at the bottom of its channel line too. So again, it's like the market is just sitting here waiting for Tuesday.
Yeah, one of the things I think is going on in the market is it seems the market is less concerned with inflation and now they're more concerned with recession. Hence
Bingo. That's what we're going to talk about in the next session.
Oh, actually. Look at that. I'm reading ahead.
It's exactly why I want to talk about that.
Okay.
And show you some things in that one.
We'll save for episode 2.
So here's why I think we probably won't get below 7. We could get below 7, but I don't think we're going to get below 7.
Okay.
But I think we're definitely going to get it next month. So this is the S&P up here with the trend line and the 200-day moving average. There's that open gap that I talked about right there. Here's the 50-day moving average, which is right in the middle of that open gap right now. So market could very easily go down to that. Okay. You know, this is all kind of implying to me that we're going to get a hotter number on Tuesday than the market wants.
Okay.
Not a lot hotter. It'll be better than last month, but it could actually be hotter than 7.3.
So between 7.7 and 7.3 is what you're saying? Headline.
No, hotter. Between 7.3 and 7.5.
Okay. I was saying 7.7, but okay. 7.7 and 7.3.
Between 7.3 and 7.7. Right.
Right.
Yes.
Right. Okay.
Right. I mean, that's kind of what this is telegraphing. That doesn't mean that's going to happen.
Right.
But
okay.
But this is the period that I marked with the blue vertical lines is November. And the inflation report comes out on the 13th for November.
Oh, I see what you're looking at.
You see that the CRB index is basically flat for the month.
Yeah.
But oil and gas are dropping. Lumber went down a little bit, but oil and gas have been dropping significantly. But look what happened when December started. They're just falling off a cliff. Again, I think this is telegraphing a coming recession. And I'll show some more about this in the next session.
Okay.
But this is why I said, 7.3, we could, I don't think we'll get a 6 handle.
Right.
But the commodities are implying 7.3 or less, maybe 7.1 or 7.2. Okay. The market, though, is implying that it wants to go down. So we'll see. That doesn't mean it will.
Yeah, of course.
It could just as easily break through this downtrend line if we get a good number. So everything's relying on Tuesday again.
Okay.
And then the last one here is this is the S&P and the 10-year Treasury.
Hmm. Okay.
So they're usually inversely related.
Right.
So you can see again that the S&P keeps bouncing up against this, keeps pretty consistently hitting that downtrend line.
Mhm.
But every time the S&P goes down, it's when the 10-year Treasury is going up. So the Treasury right now is coming down. This is a daily view. Here's a weekly view. So this black line is the 200-day moving average. 40-week, which is 200 days. So again, you can see the S&P consistently hitting this and dropping. And every other trader out there is looking at the same charts.
Right.
That's why this works. They're seeing the same thing. Every time we hit this, we drop big time. If we drop this time, probably get down to the 200-day right down here, 200-week actually, right down here.
Okay.
But we'll see. And then here's the 10-year Treasury, again, just been hanging out at 350.
Yeah.
Waiting to make a move.
Yeah, it's going to be a fun week. I look forward to our conversation next week. Can you show me your newsletter one more time?
Yeah, I was going to save this for the next one, but let me show it to you this time. This is the 10-year versus the 2-year. So this is the yield curve.
Yep.
So this top one up here is the 10 minus the 2.
Okay.
And the pink line is the 0 line. So you can see where it's hit it before. But the interesting one is the 2-year minus the 3-month.
Oh, I haven't looked at that one. 2-year minus 3-month. Okay.
Right. And you can see down here, just before the recession, went below 0. Right here in 2020, just before the COVID crash, went below 0. It's right at 0. It's at 0.02 right now.
Interesting. I've actually never looked at the 2 and 3-month. Okay. I'll have to look at that.
And I think somebody asked Powell about the 3-month, whether it goes below 0, because it's been a very good predictor of recession. And that's why I put it in this section to talk about in the next session. But he said there's a 38% chance that it would go below 0. It's at
38%.
38%. It's at 0.02 right now.
Yeah, that's pretty damn close.
Historically, 9 out of 11 recessions, the 3-month has gone below. The 10 minus the 3 has gone below 0. Yeah, so 38% chance basically equates to 100% chance of a recession.
Okay. Interesting.
Yeah. We'll talk more about that in the next session.
Very cool.
But so for next week, this is from my newsletter right here. I've been starting to put the earnings for the next weekend as well.
Yeah, I like that.
So you can see what's coming. And we just talked about all of this. We'll talk about this in the next session, which will be very interesting.
Yep.
All right. So let me show my newsletter real quick. If anyone's interested, and this is a lot of the research that I do every week for myself, and I just put it together and send it out to anyone that's interested in seeing it. Yep. There's also breakpointtrading@gmail.com. Just send me a note and I'll include you on the list. There's also a number of charts in there that you can click on and save them to your favorites.
Yeah, I love that you do that.
Yeah, that's actually a very valuable service.
Mm-hmm.
I don't know if folks understand how valuable that really is. It's all the way at the end down here. These right here. We're going to look at some of these in the next session. But for instance, that VIX chart that I just showed is right here. So right from the newsletter, you can click on the VIX chart. You'll get this one here that I just showed you.
Look at that.
And then you can just save it to your favorites and you will always have it.
Yeah. Dan, I appreciate you. It still amazes me that you do this every week. The fact that you keep adding more and more. Also, you have this humor right to start it off, which is amazing, folks. Get added to the list. I look at it every week. This week I consumed it cover to cover. Dan, thank you so much.
You bet. Talk to you on the next one.
Mhm.